Mullen has dropped two major updates, so we have both good and bad news. If you're a fan of the stock, sit tight as we take you through the latest Mullen stock news. But before we do that, subscribe to our channel $1 World for regular Mullen stock updates. Mullen has proudly introduced their inaugural production vehicle, the Mullen 3, an electric Class 3 truck, which has successfully completed its manufacturing process at the company's commercial vehicle assembly plant located in Tunica, Mississippi. David Mitchery, the CEO and chairman of Mullen Automotive, Inc., expressed his satisfaction, stating, "We've remained committed to our production goals for commercial Class 3 vehicles and are now celebrating the achievement of seeing the first trucks come off the assembly line." Mullen intends to gradually increase its production pace throughout the remainder of this calendar year. Upon reaching full capacity, the Tunica facility plans to manufacture 3,000 Class 3 vehicles annually per shift. As the demand for electric vehicles rises, Mullen has plans to introduce a second shift for Class 3 production, effectively doubling the annual capacity to 6,000 vehicles. As the volume of Mullen 3 trucks is scaled up, the company will also focus on testing and launching the Mullen 1, a Class 1 EV cargo van, all within the Tunica facility. The goal is to fulfill customer orders for both commercial Class 1 and Class 3 vehicles by the end of the year. Mullen has secured purchase orders worth $79 million for the Mullen 3 Class 3 EV trucks from Randy Marion Automotive Group and MGT Lease Company. The Tunica Commercial Manufacturing Center spans over 120,000 square feet and sits on more than 100 acres of land. The facility specializes in producing Class 1 and Class 3 commercial EV vehicles and is strategically located near major rail lines, highways, the Mississippi River systems, and air transportation hubs, making it a central logistical hub in North America. Priced with the manufacturer's suggested retail price, or MSRP, of $68,500, the Mullen 3 qualifies for $7,500 in federal tax incentives. This efficient Class 3 low-carb forward EV truck boasts an 11,000 gross vehicle weight rating, a turning radius of 38 feet, and exceptional visibility, ensuring optimal maneuverability on narrow urban streets. Its adaptable chassis offers a clean top surface for easy customization with bodies stretching up to 14 feet long and a payload capacity exceeding 5,800 pounds. Enjoying the video so far? Be sure to join our Discord community to connect with other like-minded investors. Mullen supporters. The electric vehicle startup had recently undergone a 1-for-9 reverse split on August 11th, and a crucial condition was that the company's stock price needed to remain above $1 for a continuous period of 10 days by September 5th, in order to meet Nasdaq listing requirements. Initially, things appeared to be going well for Mullen. Whenever the stock price dipped below $1, there was a surge in buying activity that prevented the prices from falling further. On August 15th, the stock experienced the final rush of buying in the last minutes of trading, propelling it from 98 cents to $1.02. However, a setback occurred on August 16th. The value of Mullen stock closed at 98 cents, ending its streak of maintaining a price above $1. According to the regulations set by Nasdaq, this situation now places Mullen at risk of being delisted when the markets reopen on September 6th. If delisted, the EV startup would move to the less liquid over-the-counter markets, potentially making it more challenging for investors to purchase shares. To address your question, yes, based on the information provided, there is a real possibility that Mullen might face delisting for the Nasdaq Stock Exchange due to its stock price falling below $1 for an extended period. This could indeed result in the company being traded on the over-the-counter markets, which tend to have lower liquidity and might make it less accessible for investors. However, the situation could change depending on future market movements and the company's efforts to meet listing requirements. Nasdaq's listing regulations dictate that companies must maintain a minimum stock price of $1 to remain listed on the exchange. If a company's stock price closes below $1 for 30 consecutive days, Nasdaq staff initiates the process of potentially delisting the stock. Companies that fall below the $1 threshold typically receive a 180-day grace period to regain compliance, which can often be extended by an additional 180 days. This leniency has allowed numerous stocks to trade below $1 for extended periods. As of August 21st, there are 329 entities facing this situation. During this grace period, companies can take measures to help themselves recover. Management can focus on boosting sales, divesting underperforming assets, bringing in new talent, or cutting costs. A whole industry of turnaround consultants exists to assist such companies in getting back on track. Some, like BuzzFeed, manage to generate short-term excitement among retail investors. Alternatively, Some companies opt to sell themselves to the highest bidder, merge with another entity in a backdoor listing, or engage in other forms of financial engineering to increase their market capitalization. However, even with these efforts, many companies struggle to bring their stock prices above $1. Turnarounds are complex endeavors, and these strategies don't always yield success, as has been the case for Mullen so far. For companies that continue to fall short, reverse share splits become a viable option. This involves consolidating shares, such as converting 10 old shares into a single new share. This maneuver reduces the total number of outstanding shares, boosting the price per share without altering the overall value of the company. Mullen employed this strategy on May 4, 2023, executing a 1-for-25 reverse stock split as a means to address their falling stock price. Nasdaq's regulations have put in place safeguards against excessive reverse stock splits. Under the 5800 series rules, if a company experiences a failure to meet the minimum bid price requirement and has executed one or more reverse stock splits within the previous 2 years with a cumulative ratio of 250 shares or more to 1, it becomes ineligible for any compliance period specified by Rule 5810C3A. In such cases, the Listing Qualifications Department will issue a staff delisting determination according to Rule 5810. This likely explains why Mullen pursued a second reverse split, opting for a 1-for-9 split on August 11th. The company had already undergone a 1-for-25 reverse split earlier, and the recent split was the maximum it could enact to the nearest whole number without exceeding the 1-for-250 ratio. However, the rule is somewhat intricate. Based on a conversation with Nasdaq representatives, companies can execute reverse splits of greater than 1-for-250 if desired. The only drawback is losing eligibility for the 180-day extension window mentioned earlier and receiving an immediate staff delisting determination. Consequently, Mullen could potentially go for a 1-for-100 reverse split, boosting its share price and increasing confidence in maintaining a price above $1 for at least 10 days. The company would lose the 180-day extension but may not require it, given its recent history of shares trading above $1 for consecutive days. Time is of the essence. The 10 consecutive day rule necessitates that Mullen enact a split by August 22nd to leverage this approach. Mullen's strategy suggests two possibilities. Firstly, management seems willing to gamble on a Nasdaq appeal. Shares were above $1 prior to the 1-for-9 reverse split between May 4th and May 19th, constituting a 12-day business period. The company could use this period to argue that it regained compliance and that staying under a 1-for-250 share split qualifies for consideration. Secondly, it appears that Mullen's management is apprehensive about Nasdaq potentially extending the 10-day compliance period to 20 days or more. Rule IM 58102 allows staff discretion to demand a company satisfy the price-based requirement for over 10 consecutive business days, up to a maximum of 20. This move could negate the period in May when shares traded above $1 and void any subsequent periods where shares reached that threshold, even after potential further reverse splits. Mullen faces challenges, including a missed annual report deadline and legal disputes. These pressures are causing time constraints for the company's management. Mullen's stock has faced scrutiny due to weak corporate governance and dilutive share offerings, resulting in substantial investment value erosion. While Mullen had potential advantages, like CEO David Mitchery's fundraising acumen and acquisitions like Electric Last Mile Solutions and Bollinger Motors, the company failed to leverage them effectively. Today, the EV startup is in a battle to maintain its Nasdaq listing, and even if it remains listed, its prospects continue to dwindle, paralleling its share price decline. All in all, Mullen continues to take slight hits as the company attempts to regain its old market capitalization and share price. Remember that this is not financial advice and you should always do your own research and make informed investment decisions. That was all for today. Let us know if you think this stock will make you rich or not in the comments section. Hit like and subscribe to our channel $1 World for more such penny stock videos, and we will see you in the next one.